Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a rare degree of financial stress because that's what's been going on with the markets, the financial sector, the banking sector. As you know, it's been all over the headlines. It's been in the stock market every day. I'm going to start off with an update here on the XLF, and then we're going to look at a couple other things. I'm going to look at Credit Suisse, and I'm going to look at that other bank, FRC, that the pool of big banks have raised money to help support. We'll see how well that's working out. Then we're going to take a look, focus on the Dow Industrials, one of my key indicators I look at, and then take a look at oil, gold, and silver. All right, so starting off here with the financials. Last week I talked about XLF, and I talked about how we were in a pretty strong downtrend, pretty strong breakdown that we got that week. Well, we were down $1.03 on Friday. We were down $1.95 for the week. So it continues to look like it's in free fall, and I think there's more to come. I mean, there's no doubt about it in my mind. The financials are really struggling right now. All right, so that is the update on XLF. I want to show you something. It's also a couple of tweets that I came across. This is really interesting. You may have seen this. Charlie Bilello put out this tweet about how the 7-day decline in the 2-year Treasury yield was the largest decline since the week of the 1987 crash. Okay, so yeah, there's a little bit of stress going on in the financial markets right now. And then when you take a look at what Jesse retweeted here about Federal Reserve chart showing the discount borrowing, this is as of the week ending February the 15th, or March 15th, Wednesday, March 15th. So you could see where the line is all the way up here at $111 billion that was borrowed at the discount window to help with funding. Okay, a little bit bigger than what happened in March of 2020 and a little bigger than what happened in the great financial crisis of 2008. Okay, so we'll see how this continues to unfold. I know some folks have been using the word contagion. It sure seems like, you know, every time we turn around, there's like, okay, what's the next shoe that's going to fall? Okay, so let's take a look at Credit Suisse and let's see how that's working out. Okay, this is a chart of the daily closing prices of Credit Suisse, and you can see the peak back over here in February 2021, and we closed this last week at $2 and a penny, 201. Okay, so and in the middle of the week, the Swiss National Bank came out and said, yeah, we're going to support Credit Suisse. You know, it's almost like, hey, we got their back. Well, the market doesn't seem to think that that's doing all that great. And when you look at this historically, let's just take a look at a weekly chart. From April of 2007 to current, this bank has lost almost 98% of its value, or approximately 98% of its value. This isn't a very strong hand by any means. Okay, now let's take a look at FRC. So I can't remember exactly what day it was that it was announced that, you know, Chase and a whole bunch of other big banks, I think there was 5 or 6 or so, the big banks were all going to put in about $50 billion or something. And they were going to do like, I think 10 billion each. I can't remember the exact numbers, but it's like, okay, this pool was going to form to help support it. But again, it doesn't seem to be doing any good right now. I mean, it's closed at $19.49. This is a daily chart, daily closing prices. So clearly low of the week, low for the year. The high is back over here in November of 2021. And that high was a close of $221.91. And we're now sitting at $19.49. So not a pretty picture. And again, not a very strong hand. Of course, you know, you wouldn't have banks putting money into it if it was a strong hand. So, but, you know, again, it just begs the question, what's the next shoe to drop? Okay, so that's what just kind of hit the news this last week. Let's take a look at what happened this last week in the markets with the side-by-side view that I like to look at. Okay, here's a side-by-side view of the Dow Industrials, which was, look at my notes, down 48 for the week. So you can see down slightly in here. S&P 500 was up 55, and the Nasdaq 100 up 690 points. Now, this is the stunner in terms of the move right in here. When you look at how it opened below the range of the prior week, rallied back and closed above that range, it looks like a pretty strong bullish engulfing type candle, but you need follow through, okay? I'm still a little skeptical of this move. We'll see what happens in here. When I saw a chart, I don't have it to talk about here today, but I saw a chart that talked about the breadth of the Nasdaq and how the breadth of the Nasdaq had continued to decline while the Nasdaq was going up, and that's not a strong supporting type picture. So again, we'll see how much further does this really want to push in here, before it reverses. So this is the picture that we've got right now between the three. And then when we look at the side-by-side of the industrials versus the transports broke that counter trend zigzag three-way move in here. And now it looks like it's breaking down. It was down 435 points here on the Dow Transports. So we'll see how long does it take before we take out the September lows, both on the industrials and on the transports. Okay, let's go back and we're going to take a little closer look at the Dow Industrials. So the industrials were only down about 48 points for the week, but on Friday they were down 384 points. So pretty good little move to the downside here on Friday. And the key thing that's happened over the last couple of weeks is the close down below this support line in here, which was the December lows. And once we got that close down below that, we continued to push to the downside in here. We continue to trend down. And when I look at the Elliott wave picture, here's what I'm looking at. I think that we are in intermediate wave 3. And what are we looking for within intermediate wave 3? This is the path forward. This is what I'm looking for. Okay, 5 waves, 1, 2, 3, 4, 5 for intermediate wave 3. You cannot have overlap, like 4 overlapping 1, etc., like you had in here when you're in the third wave. You need to have a pure impulsive wave pattern, and that's what we're watching for. Now, the other thing is the third wave has a tendency to be a lot stronger than the first wave. Okay, so that, again, that is something that we're watching for. Okay, so that is the picture from a weekly view. From a daily view, here's where I think we are. To get that first minor wave down, I need 5 minute waves. Okay, I need a 5-wave structure within that. Now, within that 5-wave structure, here's where I think we are. Now, I think that we haven't quite completed that third minute wave down. I think I'm expecting we may get a little bit more chop in here for the fourth wave. I'm not quite sure this fourth wave, this minuet level fourth wave. Don't know that it's really done with that high. It may chop around a couple more days. We'll see. But that is the picture that we've got, and my expectation is for this to continue to subdivide lower in here and complete minor wave 1. Okay, so that is the picture on the Dow Industrials where we stand. I'm going to take a look and show you one of the indicators. We look at several every day, and sometimes not all the indicators are showing something dramatic and new. Let me find it and I'll pull it up. Okay, so this is the percent of stocks above their 200-day moving average in the S&P 500. We're sitting at 37%. So not long ago, back over here at the February 2nd high, we were sitting at a close of 75.75. So say almost 76% of the stocks in the S&P 500 were above their 200-day moving average. And very quickly, that has really fallen apart. Okay, now we're rapidly moving south in here. Where did we, when we had those significant lows last year, June, and then the end of September into October, we actually came down and touched the 10% level. Okay, got below the 20%, got down into this zone right here. So I wouldn't be surprised at all to see us do the same thing again as we're heading down. Now, here's the other thing: as we get into some pretty severe selling, okay, just because you get down here doesn't mean you can't stay down here. And let me show you what I'm talking about. Let's go back to 2008 and just show you how bad it got. Not only did it get down below the 10% level, it just stayed there for 5 months. And I mean, talk about pretty compressed. I mean, we're talking about down here 1 to 2% of the S&P 500 above their 200-day moving average. I mean, just incredible. Okay, but yeah, that was an intense level of selling. We'll see what we get. Okay, but right now we keep an eye on this every day. We also watch a whole bunch of others. Okay, so that is it for that indicator picture. Let's take a look at oil. Okay, United States 12-month oil is what I look at every day. It was down 63 cents on Friday, but down $4.06 for the week. Pretty big break to the downside. And WTI, let's see if I have that in front of me. It was down $1.61 on Friday, $9.94 for the week, closed at 66.74 on the near-term futures. Now here's the Elliott wave picture that I've got. Okay, we're really trying to make heads or tails of what the heck was going on over in here for the longest time. It's very frustrating. But once we started to see these 3-wave moves in here, then it started to become pretty evident that we were doing a sideways type triangle for consolidation. And that's what I labeled this as a B, as part of an A, B, C zigzag corrective pattern in here. And we did get the breakdown that I was looking for. Now, in this C wave, what are we looking for? C wave needs to be a 5-wave move. Now, it can be impulsive or it can be an ending diagonal. Okay, it can be either one of the two. So we'll watch and see what do we get. But you know, are we going to get some choppiness? Oh yeah, I mean look at what happened back over in here. But yeah, this is where we're heading, and this is about where I think, is this where C equals? Let me see, C versus A. Okay, C equals A down here around 22, so somewhere in this 22 to 24 range, kind of targeting this prior 4th wave that I've got over in here. So we'll see what we get. But right now, we're just monitoring the waves as we continue to push to the downside here. All right, that's what's going on with oil. Now let's take a look at gold. You know, I talked about GLD a couple of weeks ago, and we were still very bearish about this. Here this last week, I drew a couple trend lines. I drew them in here. You see the weekly view over here. You see the daily view. It was up 520 on Friday, this huge push to the upside, huge breakout, 990 for the week, okay? Now, here's where I drew these trend lines, and I said, okay, if we smash through these trend lines, I've got to switch to the bullish scenario because this just is refusing to break down. Now, it was frustrating because for the longest time, it was refusing to go up. But now, I am holding this scenario. Okay, here's what I'm looking at. I think that we are in a 5th primary wave move to the upside in here, coming off the low from all the way back here, December 2015. And if this is the case, within this 5th wave, we're looking for 5 waves. And right now, I think we may be in a 3rd intermediate wave. And I've got this shaded right up in here because this is a resistance zone between the high from March 2022 and the high that was July of 2020. Okay, so it's going to be interesting to see what do we do when we get to that zone. I'm expecting that if we're truly in this 5th wave like it looks like we are now, we should smash right through that. So we'll see. But that's the way the picture looks on gold. Now silver, silver's still got a question mark in my mind, but the thing about silver that was interesting, silver actually had a bigger percentage move this week than gold did. It was, I think, like 8% or something, 8 to 9% move this week. SLV up 71 cents on Friday, up $1.77 for the week. But I still cannot seem to get real bullish about this. Now, if it does, and I know I need to fix something here. Hold on a minute. Okay, that's better. Okay, so right now I'm looking at this as a 5-wave sequence continuing to push to the downside. But if we turn and flip and start breaking these highs in here, then you've got to sit back and say, okay, something, maybe gold is really pushing it higher. You know, maybe something else is going on in here, and maybe it really is turning a little more bullish. But we'll see. We'll see if we get that. Okay, but right now I'm going to continue to hold this, but we had a very, very strong week here for silver also. That is the bull. Yeah, I was looking at this. I was looking at this line chart. Sometimes, you know, things show up a little bit better when you look at the line chart versus looking at the candlestick chart. Okay, that is the picture for today, and that is it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great weekend, rest of the weekend. Have a great week. We'll talk to you on the next video.